Good evening, everyone, and welcome to Admiral Markets Price Action Trading School. Questions and answers for lesson 21 to 24. So, guys, I've received your questions, and there were a lot of questions on my email. So I will try to answer those. I mean, most of them are very clear. Some of them are confusing and have nothing to do with our price action training school. Those are mostly session recap trades. So please, I will answer all of those session recap questions during session recap webinar. But at this time, the most important thing is to focus on price action training school, because we still have like approximately 2 months to go. And then after we finish it, yeah, there will be I think one session per week of live trading. So it will be Wednesday. So instead of price action training school, when we finish it, we will be actually trading those setups that we have learned through this 2-year school course. So 2 months more to go, and we will see there are still some lessons that we need to cover. We cover majority of those, but we still have like 2 more months for lessons, and lessons will be also, some will be about trading that we will also imply on our setups, and also some psychology stuff, because traders usually lose not because of the system or trades, but because of risk, psychology, and hope trading. So yeah, we will cover that aspect also. So before I begin, as always, standard risk disclaimer explaining that CFD and Forex trading are leveraged products and bear substantial amount of risk. This presentation is for informational and educational purposes only. Video is not part of the .co.uk website, but the globalnews.com website. And today's agenda, questions and answers. Okay, I will try to answer the first question. The first question is, hello, Nenad, how are you? Okay, Ilya, I'm very, very good. Thanks for asking. Well, actually, I am very good. As you can see, we had a great run. I mean, I need to mention session recap trade, Euro-Yen. That was, and that is definitely the trade of the week. So yeah, the trade of the week is Euro-Yen. And I'm pretty much fine. So I hope that you are also good and that you are making some money from the analysis and from our session recaps. And I hope that you will also make money with our live training. Yeah, let's see. And here, guys, one more thing before I go with questions, guys. Very important, okay, here. Read my trader's blog. Today I have published 8 economic indicators that may predict a recession. Because a lot of people also asked me what I think about is US actively entering a recession or not. My opinion at this point is that the US is not in a recession. But for all of you who are still wondering how you can spot a recession and subsequent depression, well, this is what I think, okay? This is my opinion, so maybe other people have different opinions, but this is what I think, how you can actually spot recession. It's maybe a little bit longer article than you have probably expected, but I really felt that I need to give you, prolonged and more deeper answers in the subject, and I still try to keep it as short as possible, so I hope that you will enjoy it. Okay, so this is that newest blog. Ilya is asking, can you please show the Admiral page? Here, you go to Analytics, then you go to Trader's blog, and when you see the Trader's blog, Chris and I, usually we are the only one who are writing for Trader's blog, so you will see Chris' articles and my articles, and today's article is 8 economic indicators that may predict recession. So here, try to read it. Well, I'm mostly focused on yields. I explained what yields are, but also There are some other things like money supply and velocity, and definitely the bottom part is technical charts, where you can also try to mix all your fundamental knowledge with technical charts. But you need to go on monthly and weekly time frame, and you should for US you should definitely watch Wall Street Cash Index or Dow Jones. So yeah. Ilya, did you study MBA in Belgrade? Yes. It was John Nesbitt University. Yes, the private university solely focused on economics. Yeah. So definitely yes. My specialization is economics, of course, and well, I was always involved in a bit of economics. So before I actually started to trade forex market actively, I was also doing economical stuff, research. I worked for hedge fund as advisor. Okay, so for outsourced company that was actually making business proposals to people who wanted to invest with BNP Paribas Bank. So yeah, it was a long time ago. Well, really a long time ago. But definitely forex trading and analysis, analytics, and teaching you how to trade, that is the biggest possible specialization. So if I ever go to and try to make even more than MSc, well, then I would probably write a book about trading. So there is so many things, guys, here. I mean, you know, a lot of people who don't know what I work and what forex is about, they always ask me, can I jump in, can I trade with you, can you show me? And I always say, it doesn't matter if they're close to me or they are far from me. Everything can be found on the internet. I simply cannot explain to every single person what trading is about. It's a science. So that is, Ilya, is why I really enjoy these things. So besides forex, analytics, trading, and all these things, you see, I always write about fundamental things, because we need to also understand fundamental views on the market. For example, technical charts show the dollar CAD will go down today. Dollar CAD went down, but also it went hugely up when there were some comments from Governor Polos about rate cuts, no rate cuts. You can find information on the internet, but the most interesting thing is that people want to trade without any understanding of fundamental things. Well, at least you should have some basic understanding of fundamentals. So yeah, it's not that easy, but it's not that hard also, because I mean, even economic stuff, I mean economic like university stuff, you can find on the internet, on the Wikipedia page. Everything is explained, so you can also learn. I mean, most of these things you cannot learn in university. I mean, I learned most of the time myself, but the first book that I read was Momentum, Direction, Divergence from William Blow, and I also read, I watched DVDs from Steve Nisson when I also actively studied candlesticks back in time. So it helped me more for technical knowledge than, let's say, the whole university, because we didn't mention forex during my study on university. So forex trading was also a new thing even for some professors. Well, that was it, guys. Now let's see at the end. Okay, this is questions. Is naked scalping usable? So this is the first question. Is naked scalping usable? Well, guys, if you followed my previous webinar about naked scalping, definitely it's usable, but I don't know. It's a tricky question. The thing is, if you want to trade naked, you need to understand that naked scalping is done only during active sessions. You cannot scalp when there is no active session, at least naked scalping. So naked session, you should always focus on a major session and do naked scalping. So it is usable. But what I'm more focused is definitely I'm more focused on intraday setups. Okay. So that is the question. It is usable, but you need to know when to scalp. Then I had a question. Can you repeat the rules? And I got the email asking me, can I give him that guy who asked? He said, can I give him the slides? And I said, I cannot give you the slide. This webinar was uploaded, but still, if you're not sure, I can explain the rules. I mean, guys, everything is recorded. So I wouldn't mind if you go to our page. I will show you where. It's actually Price Action Training School channel on Admiral Markets YouTube here, and everything can be found here. Why would you need me to repeat now? Everything is recorded. So naked scalping here, okay, naked scalping part 1 and naked scalping part 2, everything is recorded, so you can watch the rules again. And I don't think that it's a necessity to repeat it now, because actually here everything is recorded. Okay, so we have really a good amount of views here for our Price Action Training School. The first lesson really has the most views, but the most interesting part is when we actually start to trade this on live webinars. I'm very excited also about it, but actually it will be the form of session recap. But wait, I will talk about it later, because we have questions to answer, and that was actually one of the questions. So I will try to answer during the webinar. Can we use high volatility during day trading? This is an interesting question. And I need to say definitely, guys. Definitely you can use high volatility during day trading. It's very interesting, because high volatility can provide you with good amount of pips if you time your entry correctly. So here is how you can actually do it. For example, let's say, I mean, this is now, we cannot trade anything now, but for example, let's say that you spot a high volatility setup. Okay, this is high volatility candle here, like marubozu candle. It's 1 hour time frame. So what time is this? It's 13 platform time. It's 12 my time, so it's 10 GMT. Okay, this is 10 a.m. GMT, right? 10, 11, yes, 10 a.m. So, of course, guys, you can trade this. I mean, 10 a.m. is active session. So let's say that you don't have any setup. And let's say that you have missed the setup. For example, our analysis showed that we could have shorted euro dollar here around this spot, right? So actually, it was good to short it, but it doesn't matter now. Watch this. You missed it, right? So you want to trade. Would you really sell here? I mean, the price is going down. You probably missed your trade. So what are you waiting for? You are waiting for either retracement, a scalping trade, breakout, or counter trade setup. If none of these happen, well, this is what can happen. Marubozu candle that screams for sell. How do we trade marubozu candles, guys? Watch this. Rejection from 61.8. I hope that we will have these setups during our sessions, live trading sessions. So if this was a trading session, I would tell you, okay, divide your trade in 3 parts. This is your first entry. This is your second entry. This is your third entry. Put a stop loss here. Determine your risk, of course, and then sell it. and watch what would have happened. Okay? Very interesting, right? But you need to know when to trade it. Now, another question that can arise from this answer is, can I trade this if I have already had a setup? Well, the answer is no. Because if you are already short from this part, it means that you didn't miss anything because you're actively involved in a trade. The only exception to the rule is when you don't have any setup. And here, guys, this would have been your entry. Because if you miss this, you could have entered here. And that is how we will work. But okay, I will talk about this. So if you don't have any setup, you can start searching for another setup, but not as a positional trade, but as a high volatility trade. One of the lessons we will teach is which kind of setups we can trade. And everything, guys, that we have been through on these price action trading school lessons, we will try to trade live. You will get a template. I will show my screen. And if we get a setup, you will see live trading. That is my plan. And it should happen around, it is scheduled from, let's say, my plan is to have it around New Year or just after a New Year. And that will be it will be good to start a new year with such webinars. And I still am negotiating with other markets, but I think that will be approved so we can do live trading together. Okay, so this is the answer, guys, to your questions. Here your entry, bang, it goes down. And one more thing, and that will, one more maybe a good, interesting surprise for you that I will tell you as the last question that you have asked, okay? So bear with me. Is it solely marubozu candle? Again, for high volatility setup. Is it solely a marubozu? Yes, of course. Because this is my concept. I didn't steal, it's not a good word. I didn't copy this concept from anyone. It's solely my own invention. It's very simplistic in nature. And the rules are very clear. You need to have marubozu-ish candle or marubozu candle. So if this candle was also qualified as marubozu-ish candle, yes, it could be traded. Also this one. So marubozu candle or marubozu candle that is not pure marubozu, but very, very close to pure marubozu. This is very, very good candle. It will be very, very rarely that you will see candles like this with no wick to the upside and with small wick to the downside, let alone the candle that is purely momentum, like whole body is white and whole body is black. It's very rare. So I would stick to the rules that I have originally developed. So marubozu candle indeed. Now, another good question I got from the trader. Any other time frame except H1? Well, that is what I'm also contemplating at. I'm not sure yet if I would actively change the rule, because the rule is saying 1 hour candle. But yes, guys, there might be also a setup where we could use 4 hour candles. But still, I'm thinking about it. I'm not sure yet. For example, look at this. This is excellent candle, pure marubozu candle. And I like it indeed. So I might include additional approval that we can trade 4-hour candles along with 1-hour candles. I still need to decide definitely, but I'm closer to decision that we can also trade 4-hour candles. So yes, probably. And your next set of questions. So, I mean, some of you guys, of course, you don't know each other, so you ask me same questions, and here I have tried to summarize it all up. Now, Ilya is saying H4, look at Australian dollar, marubozu candle. Yes, but you see, there is no retrace. I mean, I would prefer that this candle has not gone. Okay, this is, yes, this is marubozu candle. If this closes with bullish top, not bigger wick than this, or it can be slightly bigger wick than this, we can consider it very close to marubozu candle, so you can try to trade it. I mean, if I had the setup now, if it starts to retrace on a next candle, well, I would maybe place a pending order. So yes, this is marubozu candle, but you still need to wait for the candle to close, and then you can possibly make a pending order there. Now, what I wanted to say is there is a great indicator. It's Admiral Markets indicator, Admiral Candle Countdown. You just go like this, you change color to, let's say, red, and put it on your chart. I mean, it should show you like this. 21 minutes left to this 4-hour close. So this candle will close in 20 minutes. When it closes, if it closes like this, draw your Fibonacci, 61, 78, 88.6 marubozu, divide your entries, risk no more than 1%, your stop loss 10 pips below marubozu candle. I mean, if this happens during our live trading, I would tell you how to make and where to make your pending orders. Also, if we don't catch it during live session. Okay, next question. Which kind of stops do you use? It depends, guys. Again, if I'm scalping, then I usually use those market stops, like swing highs and lows. If I use positional trades, I also watch for confluence for stop losses. But it's directly connected to this question, how to calculate the risk. That is what I will explain. So yes, this is good now to explain these two questions at once. So if you know what a stop loss is, then you know that you can make equity stop, that you can make market stop, that you can make time stop. I prefer to use equity stop that goes in with a confluence of my charts. So let's say that, okay, this is the first thing what you need to do, guys. You need to have Admiral terminal. You definitely need to have this set of tools. When you click here, okay, this is demo account, so I cannot use, but yeah, okay, let me just switch to the account that is connected. Okay, log in to another account, so you should be able to see this. Okay, wait, just give me a second, guys. I'm trying to log in and I will show you how you can make equity stops. I mean, equity stops are what I really prefer. Okay, here, guys. Admiral Mini Terminal. You need to click here. And here, guys, you will see lot size, fixed cash risk, percent of equity, percent of balance. Then it will automatically calculate your optimal stop. Stop loss, fixed price, pips, fixed cash risk, percent of equity, percent of balance. This is what I prefer. And I really advise you to use it. Really, guys. This is very, very important. Because you will see if we get a live set up during live trading webinar, how I manage trades with risk. Because this is your holy grail. And if you get with a higher risk, then it could be, I mean, you know what it can happen. You can call 4 horsemen of apocalypse at your door. Greed, fear, hope. Don't do that. Always try to trade within the boundaries of a lower risk. So please listen to me. Your best friend in trading should be percent of equity with your stop loss. This. If you have 50 pips of a stop loss, for example, guys, let's say, for example, you want to go long, right? And you place your stop loss here. So you entered here and you place your stop loss here. So it's 19 pips. Add a little bit of spread to protect yourself, so it's 4 pips, right? So in those 23 pips, incorporate 1% of a risk. So it doesn't matter if your account is 50,000 euros or $500. I mean, it's 1% of a risk within those 23 pips. This is your best friend. You need to understand the concept of a risk in order to trade profitable. So that is the answer to your question. And how to calculate the risk? Again, guys, you can use this tool that is automatic, or you can do that manually. If your account is $10,000 and your stop loss is 30 pips, then of course you will use 0.3 lots on $10,000 because it's 0.9% of a risk. I mean, you don't need to be a master in mathematics to know these things. That is simple math. So try to use this as I present to you. It's very easy. Next question was also, how do you manage your trades? Well, you will see that also, but I have mentioned it many times. So let's say that we are long here and that we are in profit. This is resistance. Once the price breaks this resistance, if it's end of day trading, I will probably put my stop loss here, effectively securing profits. I would scale out and put one small part here. Or I might actually, it depends. I mean, there is no strict rule. You can also scale out and put the rest to break even. You can scale out, move your stop loss here. It depends on your style. It depends on your plan, on your wishes. There is no strict rule. Guys, that is why results are always different from a trader to trader. I always say one simple thing, but it's always the truth. We can all trade the same system and method, but our results will be totally different. That is because of these things. Some people would take all profit here. Some people will not place a stop loss and they will try to grab as much as possible. Some people would scale out. Some people would put everything to break even. You know, it's a single setup, the same setup I'm talking about, but results will be much different, guys. Well, it's perfectly normal for trading. So that is the answer to this question. You need to manage your own trade. I can give you the advice, but you need to manage it yourself. Question, which sessions are best to trade pound yen? London session, definitely London session, and New York session too. Also, guys, do not trade pound yen pre-Tokyo, not after New York can close, not at the end of, after the end of London. You can trade it also during Asia session, but Asia session is completely different from New York and London session because equities have huge influence on yen pairs and indices, especially Nikkei and Chinese data. Chinese data move yen pairs a lot. So it's definitely different. This is the slide, Ilya. Yes, the questions. You should see the questions. Which sessions are best to trade pound yen? So the answer is London, New York. Don't trade it during end of day. And also try to, if you trade it, only Tokyo session is allowed after London, New York overlap. No Wellington. Okay, guys, during Hong Kong, you will see a huge movement. Tokyo session. Chinese index and Chinese stock markets have a huge influence on yen pairs. So you can trade pound yen also during that time. Can we risk a bit more? Again, hypothetical question, right? So my answer is you can try to risk a bit more. But also it's very important for you to know that you need to risk your profits. So if you made $200 of profit, you can risk your profits. But don't risk more in order to make up for your loss. I mean, still it's different. I might go with 1% of risk, other people might go with 10% of risk. It's very subjective. So guys, it's very, very subjective. I cannot say can you risk a bit more if you are not prepared, right? So there are people who want to gamble in Forex market. And obviously, those people want to risk more. If I said to them, risk 1%, only they wouldn't trade Forex, never, because gamblers don't have that urge to trade with like professionals. They like to risk. They like that feeling that they can earn a lot during 5 or 10 minutes. So it depends, guys. I would say go with the lower risk always. And if you want to risk a bit more, try to risk your profits, not your equity. I mean, you need to always risk your equity, right? But if you made profits and you still want to trade, then risk your profits. Don't go above it. And finally, the last question, and if you still have any question, guys, you can ask me. We are actually here at our last question. Will there be live trading webinars based on price action trading school? Well, the answer is I think so. What I want to do is, after we finish with price action trading school, obviously we will cover most of those things that I want to cover with you. So we need to make one live session, and that should be active session. So probably it will happen either during London or during New York, but early. Maybe it will be 1 GMT or something like that. And we will try to spot live trading setups during active session. We will not rush in trades, nor we will trade anything that is not needed to trade just to say this is live trading webinar, we need to trade. We will trade if we get a setup. Setups will be based on positional trades, high volatility trades, counter trend trades. And if we don't have any setup during live webinars, then we will make pending order. I will try to make a pending order. That should happen, should be triggered during next few hours or next day. So yes, my answer is there should be live trading webinars based on what we learned. My plan is Wednesday, instead of price action trading school, it will be live trading based on what we know and what we have learned. Scalp trades, you know guys, during live trading, I personally don't like to make any scalping trades, because scalping trades really needs you to be focused on the price, and it's not very rewarding, you know. So scalp swings, positional trades, waiting for the price to enter the zone, making orders, pending market orders, that's possible. But I won't be scalping, of course, because it's not also very professional, right? You can scalp if you want, guys. You can use these kind of things. Maybe from time to time, after some news, if we see some news kicking in, then we might try to scalp the price, but it will be based on intraday setups and trading that might happen during early hours of London or New York. Okay, so we will see. I will make a plan, but definitely I expect to catch a setup during that hour, setup or two. So definitely yes. And price action trading school will not hinder our session recaps, because session recaps will still run on Mondays. Okay, now question that I see now is from Jack. How do you think US elections will influence forex markets, particularly dollar pairs? Great question, Jack. Honestly, I will make a good blog. Chris and I will make a blog before the elections. At this point, I think that if Trump wins, there will be some huge movements within equities, stock markets. If Clinton wins, then it will have a less impact. But definitely we will make a blog about it, and we will tell you what we expect. I still need to see how this last debate will go. I need to see the polls before the elections. I need to see how markets are pricing a win of Clinton or Trump, but I think Clinton has a slight advantage at this point. So I still need to see how the things will develop. But one thing is for sure, if Trump wins, it will have a huge impact on equities. especially SP 500 and Dow Jones, Wall Street cash. So we will see. I will, and I say I promise you, we will make a blog with analysis before the elections. I mean, guys, it's a major event because US, guys, is, I mean, I never would like that US goes in a recession. I already explained that in my blog, because US will drag other countries also with it, their partners, and it will not be good for the rest of the world to happen. So I don't think it might happen. Now, just by watching economical data and charts, I don't see, and I don't think that US is in a recession that some analysts might propose. I still think that US is out of recession and it's not close to it. But definitely US they don't need strong dollar. It's not good. Dollar should weaken for the sake of US economy. Ilya is asking, what were the news today that caused V-shape on dollar CAD? Well, the news, Ilya, did you see what I mean, Ilya, I know that you are always here on these webinars, but definitely you missed an important thing. Okay? Okay? What do you see here, Ilya? This caused a lot of things. But also press conference about this. So governor of BOC, it's Polos, he actually talked about exports, and he also said that they wanted to make a rate cut, but at the last moment they actively refused to make a rate cut. So that particular comment, I think, caused huge movement on dollar CAD. You see this. And then during press conference, during the presser, there were some questions which he answered, and dollar CAD, well, it rejected a lot. But a lot of things were said to cause price action like this. So comments caused it. So I still think there could be some rejection based on this, but this is what I don't like to see. This huge candle. On 1 hour, it's V-shaped reversal, yeah. Watch this. Huge, guys. This is purely momentum. This is just big money movements exiting their longs, then closing their shorts, then entering longs again. So you see prices, this is huge. This is really like V-shaped reversal, but even stronger, because this next candle completely negated this one. So yeah, this was press conference. Okay. Next question. What time frame does marubozu candlestick reliably indicate a trend? It's not the indication of trend, Martin. Marubozu candlestick. You see, this is sort of marubozu. This is also. See? This is also like marubozu, similar. This is great marubozu example. It's not indication of trend. It's indication of momentum. So momentum and trend are not the same. It should not be frozen. I think I'm showing my screen. I don't think it should be frozen. But here you should see my screen now. So marubozu candle is actually momentum candle. Trend is not the same as momentum. Yes, Ilya is saying momentum is like the pace of a car or like acceleration. Yes. Momentum can precede a trend. But if you see, guys, the primary concept of trading, and this is my sole definition, my most simplistic definition of forex trading. If the market is in uptrend, you want to buy when price is oversold. If market is in downtrend, you need to time and place your entry when price is overbought. Momentum is different. You need a loss of momentum to trade with a trend. So trend is not momentum. Momentum precedes a trend, and momentum can happen during the trend. Momentum trading is different than positional trend trading. So these are momentum candles. See, but this is hard to trade, guys. You see that this is, I mean, what could have happened with people who shorted here and didn't take the profit? They would have been in a huge loss now. Yes, this could be treated as marubozu candle. So your possible entries could actually be here. Stop loss 10 pips below this, 1% of risk. This is not a problem, this small wick. No, this is Australian dollar, Ilya. I'm showing Australian dollar chart. So this could be actually a trade. Yeah, but you see the price is, it needs to retrace. So watch for this. Okay, so do you have any other question, guys? Let's see if we have any other question. Ilya is saying Australian dollar is his favorite pair. Well, not mine. I mean, my favorite is pound yen. But well, I prefer yen pairs to dollar pairs because yen pairs give me much higher pip count than dollar pairs. I mean, watch what happened with euro yen and pound yen. Guys, did you trade pound yen? I told you to go short around 128. This also could have been the trade of the week. I hope that you traded it. It was session recap trade. 128. Well, if you still don't know what session recap is, then please watch my webinars. They are all recorded and all prefacts. So I told you to sell here and watch what happened. Okay, I don't see any questions, so I assume everything is clear. Thank you guys for your questions. I appreciate it. We still have things to cover with price action trading school, and hopefully then we will also have live trading webinars. Reddy is asking for one more question, of course. Ilya is saying, yes, thanks, I won with shorts. Yes, with yen, of course. Yen is really good currency. Yeah, I really liked it. I like all yen setups were very, very, very good. Yeah, definitely. Okay, ready. Go ahead and ask me. No problems with that. Just ask. I'm here to answer your questions. Please explain briefly how Europe and UK stocks will affect euro pound dollar pairs. Okay, UK stocks and euro dollar pound dollar pairs. Well, if you see here on the movement on euro and pound dollar, there is no much influence on stocks, on European stocks with euro dollar and pound pairs. one of the things I follow is equities markets, especially Nikkei, SP 500, and DAX. DAX, if you open this tool, correlation matrix, now you will see, watch this now. Let's see, these are, I mean, guys, this is only markets, different markets, Nikkei equities, we say. So let me put euro dollar here, euro dollar, and let me place pound dollar. We will change this to, let's say, intraday time frame, like 100. We should see some info. Let's see if I can get some more info here. Yeah, I don't see any info now because some of the markets are closed, so I cannot see a lot of info here. But you see here, let's use 100 bars. Last 100 bars, pound dollar had a good correlation with Japanese 225, good correlation with SP 500. Watch this, correlation with euro dollar, minus. It's not that big, right? I still need to see the correlation between DAX. You see? DAX plus 17. Nothing. This is nothing. And that is what I also observed. There is no big correlation between DAX, euro dollar, and pound dollar. Obviously, negative, more negative is with euro dollar. And usually if DAX goes up, euro dollar will go down. That is what you should follow. But sometimes this correlation can change. So last 25 bars, so last 24 hours, this is the correlation. For longer term, correlation 25 days, that's roughly a month, you see, there was also negative correlation. But now this is the answer to your question. Monthly correlation for the last month was negative, but it's not that negative. I mean, it's still going in different direction. DAX up, euro dollar, pound dollar down, but it's not that big, like minus 77 Nikkei, you see? So I would say pay attention to both daily correlation, 25 bars, it's roughly a month, and 1 hour. So euro dollar is going in the different direction, but pound dollar, no. So you see, that will be your, that could be your direction ready. If you see that DAX is going up, it means based on this data that euro dollar will go down, and it's usually like that. But have in mind that sometimes it may happen that it doesn't follow. Sometimes it doesn't follow. So be careful about it indeed. Sometimes you see, sometimes it will not follow. Sometimes you will see that 1 hour correlation is positive. But if you see that it's in confluence with daily, negative, and here negative, then you don't go in a counter direction. If DAX is going up, euro dollar will go down. If DAX is going down, euro dollar can go up. Okay? That's it. That's the answer to our question. Watch this correlation table. Daily, 50 bars, and 1 hour, 25 bars, and use the data. Okay, guys, so that's it. Any question? If you want any other question answered, just ask. How to have correlation table? You should download it on Admiral Markets Supreme page, but you need to have a live account with Admiral Markets, because if you have demo account, it will work only for 30 days. So you need to have a live account, Admiral Markets correlation table. So live account, and then here You can find an article, what is currency correlation, how to use it, and you can actually try to search for some information. I also did a webinar about correlation table, about all tools that are incorporated in Admiral Market Supreme. So, okay, this is also, you can download it from here. Supreme Edition. Free download. Yes, also you can get it. Yeah. So that's it. If you still have any question, guys, that's it. Thank you for your question. I will be here with you soon, guys. Expect new analysis tomorrow, and have a great day ahead. I hope that you enjoyed the webinar and that I answered most of your questions. Thank you, Ilya. Thanks, guys, for asking me, and hope to see you soon. Cheers, everyone.